Hi, I'm Dave Stevens, President and CEO of the Mortgage Bankers Association. I'm pleased today to have with me Sanjiv Das. He's the Chief Executive Officer of Caliber Home Loans. Welcome, Sanjiv.
Thank you, Dave. Good to be here.
Sanjiv, as you know, the MBA represents lenders of every type: big banks, regional banks, credit unions, community banks, and independent mortgage bankers. Would you mind taking a moment from your perspective and telling us how you see the role of the independent mortgage banker in today's market?
Sure, Dave. Look, as you know, I've been a banker before, and so it gives me sort of a unique perspective to sort of come on the other side, so to speak, and give the perspective of what the role that an independent mortgage banker plays. If you really think about what happened during the housing crisis, essentially, we bankers at the time took the heat for a lot of what had happened leading up to the housing crisis. And so clearly, and that was the right thing for us to do at the time, we had to step back and get things, the house back in order, so to speak, while the housing industry continued to go through some pretty tough times. But it needed the independent mortgage bankers to kind of step in at that time and take prudent risks, so to speak, that kept the housing market going. And it shouldn't be a surprise that in the last 8 years or so, the independent mortgage segment has actually grown to a sizable segment, mainly because it has picked up on the pieces that some of the major banks had stepped back from. So it played a very important role, and I'm sure you would agree with this as the head of the MBA, in picking up that spectrum of risk, which, and I mean that in a prudent way, that spectrum of prudent risk, which we needed to sort of take across the industry while the banks, got back in shape to take on that risk, hopefully as well. So I think it plays a very important role, and I mean that not just from an origination standpoint, but also from a servicing standpoint. Things like, again, I know that these are terms that we kind of shy away from a little bit, but non-performing loans. I think if private capital had not stepped in as quickly as it did in the US and put it on independent services like it did, and we played our role as responsibly as we could, the crisis in the US housing market was actually shorter than it was in some of the European markets because of the role of independent mortgage bankers and private capital.
That's interesting. In tandem to that, I always have to fight back in Washington, D.C. against this premise that independent mortgage bankers aren't regulated. And we constantly make those points. Could you share with us your views, having been on both sides of the aisle, how you would respond to that question? Are independent mortgage bankers regulated?
No, I think that's a fair question. The question I often ask myself, having just come off the payments industry where I took a brief hiatus, is how much regulation is enough regulation? And I do think that the mortgage industry as a whole is highly, highly regulated. And I believe that independent mortgage bankers are also highly regulated. I mean, we are regulated by all the state agencies. We are regulated by not exactly regulation, but governed by the same principles of consumer protection, the CFPB. And so we pretty much, with the exception of maybe the OCC and the FDIC, because we are not depository organizations, we are pretty much regulated by the same sets of entities, and there are a lot of regulators. But the one thing, Dave, you and I share in common for the number of years we go back together, is the ultimate regulator is yourself. And responsible lending starts not with how many regulators you have, but how responsibly you manage and run the organization that you control. So oftentimes I do things above and beyond what a regulator would ask us to do. And you and the MBA and institutions like us often talk about macro risk, which emanates from micro risk, because we see risk faster than perhaps regulation sometimes does. So I think that's an important principle that embodies how we work. And that's why I don't worry about not having the SEC and OCC upon us, because I think we've learned the lessons from the great lessons they taught us, and I think we have plenty of regulation to sort of keep us all in check.
Well, those are great points, and your point about responsibility. One passion you and I both share in terms of responsibility is our responsibility to serve diverse markets. And credit access and diversity of the demographics of our future population are important, I know, to both of us.
Yes.
How do you look at the needs to provide diverse credit access to communities looking forward from your perspective at Caliber?
Again, it's a very important part of what we do. We are very, very finely tuned to making sure that we address all populations and are as diversified as we can be in terms of the spectrum that we lend to. So I'll give you an example. About 40% of our home buyers are millennials. And this is for a company that is essentially in physical distribution as opposed to digital, right? So I know digital is the buzzword these days, and all strength to digital. We do it the old-fashioned way. We have the option to move digital whenever we want to. But in the old-fashioned way, the interesting thing is about 40% of our consumers are millennials. So what's going on here, right? It's a little bit of a mix of print and digital here, which will coexist, we think. But we are very responsible about making sure we lend to the FHA segments, the VA segments, the millennials, and of course I've been public in saying that we lend very responsibly even outside of the safe harbor to the non-QM space. But again, a very responsible section of the non-QM space where we check, recheck, and check again the ability to repay. That's really important to us. And I can tell you from our credit experience, it's been a really, really good experience. And we feel very proud that we've been able to help people get into lending that some of the mainstream lenders had, perhaps rightly so, stepped back from. Now the question is, as the market inflects, the question is we have to be very careful about making sure that the credit box continues to remain responsible and that the documentation continues to remain responsible. I can tell you there's a lot of pressure we face on stuff like that, and we are not relenting. So very proud of what we've done in lending to a diverse population, Dave, and it's been wonderful working closely with you and making sure that we get to that.
Well, thank you, Sanjiv. Sanjiv Das, Caliber Home Loans, thank you again for taking a few minutes to spend time with us today.
My pleasure, Dave, and thank you for all your support and great leadership.
You bet.
Be sure to follow us on Twitter at MBA Mortgage and like Mortgage Bankers Association on Facebook and Instagram.